Hi everyone, thanks for checking in. It's Adam here at Low & Co Realty, and today we're looking at the Wellington real estate data for the month of May 2023 compared to previous Mays, and looking at the overall trends. And folks, in May, Wellington values softened again, they declined again, but everything else points to the market firming, by which I mean the market getting tougher for buyers, better for sellers. So my message to buyers continues to be, and it has been this message for about 9 months or so now, get in amongst it, because I don't think buying conditions are going to get better. There is more risk that they're going to get worse than getting better. So let's get into the numbers. Median sale price in May 2023, 795,000 versus 900,000 a year ago. That's down 12%. 12% is quite a big drop, but 12% is not as much of a drop as we've seen on a 12-month basis for some time now. And if you look at that overall pattern of the graphs there, look at the blue lines. The median sale price has been bouncing around 800,000 since July 2022. So since July, I've been suggesting that the Wellington market has been bottoming out, has been stabilising, and that remains the case. If you follow these videos, you will know I don't really pay too much attention to the median sale price, because it is reflective not just of the underlying values of real estate, but also the mix of properties sold in that month. And so for that reason, I pay way more attention to the Real Estate Institute House Price Index. So let's look at that now. And you can see there, Wellington prices, again, as I said at the top here, they softened in May by 1.4%, down by 4.3% in 3 months to May, 15% in the year, and since the peak, 26%. That is the biggest drop we've seen nationwide, compared to Auckland at 23% and the country overall at 18%. So Wellington still is leading the charge. Wellington has fallen further than anywhere else, but it has been stabilising for some time now, and other regions are catching up. So if we look here at the more granular data, Wellington City, which of course is where we here at Low & Co operate, quite a significant softening in the month of May at 3%, 5.6% over the last 3 months. And that obviously is bad news for owners and sellers of real estate, good news for buyers. But obviously the smaller the sample size, the more the numbers bounce around a bit. And so I don't pay too much attention on a month-to-month basis on the different territorial authorities in the Wellington region. So the Wellington region shows the trend on a more, I suppose, consistent basis. But you look at the graphs there, and the blue line shows the monthly results for the Wellington region. The orange line shows the 3 monthly results for the Wellington region. It's clear to see there that since the middle of 2022, the degree to which our values have been dropping has been easing and heading back towards parity, parity being no drop at all. Consistently heading back towards zero, where we almost got to zero in April 2023, the previous month, and then in May, just a fresh deterioration there with a drop of 1.4% in the month, or 4.3% in the 3 months. So the question is this a new trend? Are we going to see new deterioration of values or consistent deterioration of values in Wellington, or is this a blip in the data? Because if you look back to January 2023, we saw a dip in the data and it recovered straight back up again. So what's going to be the case? Obviously only time will tell. My personal view is that this is a blip, because all of the other data suggest a slight firming of the market. Things are not deteriorating any further. They're getting tougher for buyers, not better for buyers, but only time will tell. These things, of course, are notoriously difficult to predict. Looking now at new listings coming to the market, so 458 in May versus 675 a year ago and 622 2 years ago. So folks, the number of new listings coming to the market continues to be completely starved. It's a significant reduction compared to a year ago, and this is consistently what we've seen for about the last 8 months or so. So the way I say it is that vendors are on strike. They're simply not bringing their properties to the market. Vendors, for the most part, wholesale, are not under financial stress to the point that they are forced to sell their house. They don't like the prices, they've fallen, and so therefore they're simply not going to sell until prices rise or until their hand is forced. So new listings tighter than at any time since 2015. If you look at the red line there, the 6-month moving average, we're even lower in the 6 months to May than we were in the 6 months to September 2020, which took into account the whole lockdown period. So new listings coming to the market have been remarkably tight. And if we look there at the May average of 660 since May 2015, we're about 1/3 down than we are typically in the month of May. So vendors are on strike, new listings coming to the market are really very, very low indeed. Looking now at the number of sales, so 653 compared to 524 a year ago and 735 2 years ago. So compared to a year ago, we actually saw a significant uplift in sales. Now, this is the first time we have seen that for some time. We have seen consistently sales being lower than 12 months previously. It has been easing and heading again back to parity, but this is the first time we've seen sales a greater number of sales than 12 months ago. Again, if we compare it to the May average, 732 versus what we achieved at 653 in May of this year, we're still below average for May, but not nearly as below average as we have seen in the last year or so on a month-to-month basis. So buyers are reconsidering old stock. Buyers are coming back to the market. Vendors are not coming back to the market, and as a result, most of the new stock is getting sold, and then buyers are having to reconsider stock that has been on the market for some time that they previously dismissed. They are reconsidering again, and we're seeing old stock selling again. So again, you look at the next graph, which shows the relative sales compared to 12 months prior. You see that the blue bar chart. We're above the zero line for the first time, with one exception of January 2022, and Januaries are always a bit of a funny month. They're a very low volume month, and so those numbers can be all over the place. So if we exclude January 2022, this is the first time we've seen more sales taking place than 12 months prior since May 2021, which happens to be exactly 2 years ago. So sales volumes are definitely recovering. How long is it taking to sell property in Wellington? Still quite a while. It is still sluggish out there. There's no question about that. 54 days. Compared to 55 days, May 2022, and 24, May 2021. Remember, 2021, we were in the absolute peak of the market. Things were very, very strong indeed in the first half of May 2021. Started to slow down in the second half, reached the absolute peak in late 2021, October, November. So about the same duration to sell in May as we saw 12 months ago. It is still a bit sluggish. It is quite a long time, still nearly 2 months. But it has been stable over the last 3 months, and we're certainly past the peaks that we saw back earlier in the year, where we got to almost 70 days as a maximum. Inventory. So how many weeks worth of supply we're seeing on the market? In May 2023, 14 weeks, folks, compared to 20 weeks a year ago and 5 weeks 2 years ago. Again, that 5 weeks really does show how tight the market was 2 years ago. That's extremely low levels of inventory, just 5 weeks worth of supply on the market. That's crazy. 14 weeks happens to be bang on average. So according to this metric, we have a perfect balance of supply and demand according to what we normally see on a long-term average basis. So inventory levels are absolutely at normal levels in Wellington at the moment. Looking now at the number of Trademe listings, so this is the gross volume of listings on the market, not new supply, but total supply on the website. 2253 listings in Wellington region in June, as of a couple of days ago, compared to 2828 a year ago and 1085 2 years ago. So we have seen a 20% reduction over the last 12 months in the number of listings on Trademe. Now, how do we get a reducing level of supply on Trademe? Well, we're getting more sales taking place, and we're seeing, obviously we always see some properties that just don't sell get taken off the market. But the main thing I would suggest that is changing here is that sales are taking place at a greater rate, as we saw earlier on. Whilst vendors are still on holiday, vendors are still on strike, they're not bringing their properties to the market on an increased basis, but sales are increasing on a relative basis. So as a result, Trademe listing coming down. So you look again at the shape there, the blue lines and the red lines indeed telling a consistent story, and that is that we've seen quite consistent, relatively consistent levels of Trademe listings since about kind of March, April 2022, just over a year ago. But in the last couple of months in particular, we've seen quite a steep decline in the amount of stock on Trademe. So again, all of these data points, except for the softening values, are pointing to the same thing, which is that the Wellington market is slowly firming. It is relatively stable. It is now starting to firm, and in particular with Trademe listings 20% lower than we saw 12 months ago. So folks, in summary, Wellington values broadly stable, but they have declined again in May. I suspect that's a one-off blip, but only time will tell. New listing volumes are consistently low and have been so since September 2022. Vendors are on strike. Sales volumes have been recovering on a relative basis and particularly strong in May compared to last May. Duration to sell property still quite long, but stable and certainly past the peaks that we saw a few months ago. Inventories remain at relatively normal levels in Wellington. Trademe listings are 20% down compared to a year ago. So Wellington values were soft in May, but everything else points to a gradually firming market, in my opinion. So my message to buyers continues to be, take advantage of these conditions while they last. For those of you who are considering selling, conditions are definitely getting better. If you need any advice, please reach out. Adam here at Low & Co. Thanks for checking in. See you next time.